Hi, everyone. Welcome to our presentation on the Keystone Pipeline. During this presentation, we'll be explaining why this project is important to the Canadian economy from a macroeconomic perspective. I'll start out with telling you a little bit about Keystone and then move into some points regarding fiscal policy and monetary advantages. After that, Angus will take over and explain the benefits from an aggregate supply and demand perspective, the impact on GDP, as well as investments and imports. From there, Daniel will take you through employment benefits, Glace will tell you about the impact on inflation and aggregate expenditures, and to wrap things up, David will provide you with information regarding trade and currency value and provide you with our recommendations and a brief conclusion. We hope you enjoy our presentation. The Keystone Pipeline is a major oil transportation system that moves crude oil from the oil sands in Alberta to refineries in the United States. Proposed in 2005 by TransCanada Corporation, the project was designed to enhance North American energy security by increasing the supply of Canadian oil to the United States. However, the pipeline became highly controversial, particularly its Keystone XL expansion, which was canceled in 2021 due to environmental concerns. This presentation will argue a persuasive case in favor of the Keystone XL pipeline by examining its compatibility with macroeconomic principles and research from a variety of scholarly references. The Keystone Pipeline aligns with expansionary fiscal policy by stimulating employment and output without direct government spending. During times of weak demand or a recessionary gap, policies like increased infrastructure investment, tax cuts, or government spending can boost economic activity. In this case, the pipeline's construction would contribute to job creation and increased incomes, which, in turn, generates higher tax revenue and helps reduce deficits. From a monetary policy perspective, banks and investors play a significant role by financing the pipeline and related ventures through deposit lending activities. This form of finance stimulates the money creation cycle, boosting overall liquidity and supporting economic growth. However, as spending and GDP rise, the Bank of Canada would eventually need to step in. To prevent the economy from overheating or experiencing inflationary pressure, the central bank may implement contractionary monetary policies, such as raising interest rates, to cool down excessive growth. In summary, the Keystone Pipeline demonstrates how large-scale infrastructure projects influence macroeconomic conditions affecting employment, tax revenue, and monetary policy interventions, ultimately shaping the broader economy.
With the construction and the operation of the Keystone XL pipeline, it is anticipated that there will be a significant increase in Canada's aggregate demand. As discussed in class, aggregate demand is comprised of consumption, investment, government spending, and net exports. Starting off with consumption, with any big project, there's a lot of workers working to get it both completed and on maintaining that once it is completed. What this means for consumption is with more disposable income in the pockets of the workers, consumption will then increase. Moving on to investments, as with any large scale project that needs billions of dollars to be completed, there are a lot of Canadian companies interested in investing in this as it will likely lead to a lot of revenue for those companies. Thirdly, we have government spending. The government of Alberta was committed to $1.5 billion of equity investment in addition to a $6 billion loan that they had lined up to get this project completed. Lastly, we have net exports. The Keystone XL portion of the pipeline expansion would add roughly 830,000 barrels of oil capacity per day to the pipeline. Canada is already a major exporter of oil, but what this would do with the more efficient transportation of oil into the States would increase our market access. What this means is that Canada would be able to sell our oil at a more competitive price to international prices and make more money from our oil compared to the past. This would lead to an improved trade balance for Canada. So moving on to aggregate supply. Aggregate supply is the amount of product or service that a firm can supply at different price points. So, in reference to the Keystone XL expansion, this will greatly increase the amount of oil that can be produced in Canada because of the larger capacity that the pipeline will add. This will lead to a great reduction in the oil transportation costs to the United States and thus a lowering domestic oil prices. As a result, the aggregate supply curve will shift slightly to the right because of the increase of products being sold. With this rightward shift in aggregate supply, this means a potentially higher real GDP as well as potentially slightly lower inflation.
Good afternoon, everyone. Today I'll be discussing the three important employment categories needed in a large-scale infrastructural project. We are using Keystone XL Pipeline as an example here. Infrastructure projects don't just create jobs, that's what we need to know. They also what they do is they shape the economy and ensure the economy is moving towards the right direction. As well as the pipeline was expected to generate employment in three different ways, which are as follows. The direct job, which has to do with the maintenance and construction of the pipeline. The indirect job, which has to do with the supply material and services needed, as well as the induced job, which has to do with the spending that stimulates the local businesses. Let's dive deeper into the direct and indirect jobs, the two contributors to the economic employment growth. In addition to what has been said in the previous slide, moving forward to that, we'll talk about the direct jobs now. The direct jobs involves the workers physically building and maintaining the pipeline project. This involves the engineers, the welders, and the construction crew. But the economic impact doesn't even stop there. That's the most exciting part of it. We move forward now to the indirect jobs that supports the project by providing them with materials, services, and transportation needed for the project. This industries benefit long before the first pipe is even laid, proving the infrastructure projects fuel the entire supply chain, not just the construction site, but with all other sectors in the economy. Now let's discuss induced jobs and long-term impacts of the induced jobs. Continuing from where I stopped on the previous slide, I'll be discussing the third category, which has to do with induced jobs. What is induced jobs? Induced jobs has to do with when household incomes increases and that fuels expansion through consumer spending. For example, a worker on this project who might decide to invest in services per se, creating jobs in healthcare and probably in retail. These effects don't just stop at one industry. They ripple across communities. That's what we have to know. And to conclude, projects like this don't just build pipeline, they build economies. Thank you.
Hello everyone. In today's video, we will explore how the Keystone XL pipeline could influence Canada's economy, specifically in terms of inflation, energy prices, and aggregate expenditures. Understanding these economic factors will help us see how major infrastructure projects can shape financial stability and economic growth. Inflation and energy prices. Energy prices plays a crucial role in Canada's economy. The Keystone XL pipeline was designed to improve the transportation of oil by reducing reliance on rail transport. With a more efficient supply chain, transportation costs would decrease, leading to lower oil prices in the market. As oil prices decreases, businesses that rely on fuel for production and transportation can experience lower operational costs, potentially leading to lower consumer prices. Additionally, stable energy prices can reduce uncertainty in the market, helping businesses plan investments and long-term growth strategies. When oil prices drop, Household and businesses benefit from reduced energy costs. This can have a direct impact on Consumer Price Index or the CPI, which measures inflation. Lower energy costs mean lower overall prices for goods and services, helping to stabilize inflation. However, the full impact on inflation would depend on factors such as global oil demand, alternative energy sources, and the broader economic environment. If energy prices remain consistently low, consumers may have more disposable income to spend on other goods and services, boosting economic activity. On the other hand, a prolonged decline in oil prices could impact Canada's oil industry, affecting jobs and government revenue from energy exports. Aggregate expenditures. Investment in large scale projects like the Keystone XL pipeline plays a significant role in aggregate expenditures. When companies invest in building the pipeline, it creates jobs, increases business activity, and boosts spending across different sectors. The expenditure multiplier effect comes into play here. When an initial investment is made, it leads to increased income for workers, suppliers, and local businesses. As these individuals and companies earn more, they in return spend more, creating a ripple effect throughout the economy. This cycle strengthens economic growth by increasing productivity and reinforcing income stability. So, in conclusion, while the Keystone XL pipeline could improve supply chain efficiency and potentially lower energy costs, its overall impact on inflation and economic growth depends on various factors. The investment involved in such a project can stimulate the economy through increased spending and income generation. However, global market conditions and alternative energy developments also plays a role in determining its long-term effects.
Canada relies heavily on international trade, with over 30% of its GDP tied to exports and imports. The United States is Canada's top trading partner, accounting for 71% of its exports. According to Sayer 2024, this trade relationship is shaped by Canada's resource-based economy, focusing on oil and minerals. A weaker Canadian dollar would boost export competitiveness, especially in the energy and commodity sector. Improvements in transportation and communication have further reduced trade barriers. Canada's energy exports, particularly crude oil, uh, play a key role in shaping the trade balance. In 2021, Canada posted an $80 billion trade surplus, with it increasing to $110 billion by 2022. The Keystone XL could have expanded the surplus by increasing oil exports, but unfortunately, the cancellation marks a missed opportunity to deepen United States and Canada economic ties. Recommendations for consumers. 1. The Canadian government should support the Keystone Pipeline because it helps reduce fuel costs for consumers, which boosts their disposable income, and helps the households spend more on other goods that drive economic growth. Secondly, the government should also highlight the pipeline's positive impact on consumer confidence, especially through job creation, because more jobs helps to lead to higher consumer spending. Recommendations for businesses would be the federal government to promote Keystone as a way to increase energy exports, making Canadian businesses more competitive globally, because higher exports boost profits. And last and finally, Keystone's job creation potential should be emphasized, particularly in high unemployment areas, because more employment stimulates local economies, supports business growth, and contributes to long-term national development. So, in conclusion to our report on the Keystone XL pipeline and its macroeconomics benefits, the Keystone XL pipeline represents a strategically sound investment in Canada's long-term macroeconomic stability. It supports GDP growth, reduces unemployment, enhances trade efficiency, moderates inflation, and aligns with both fiscal and monetary policy objectives. From resource specialization to currency competitiveness, the pipeline has the potential to drive sustainable economic advancement while positioning Canada as a global leader in energy exports. And even more,